Hello everyone. So continuing with the previous lecture, we started off with the rectification of errors topic for the chapter first of fundamentals of accounting, and this is the last topic, as I told you before also that this particular topic is the last topic and we have completed the conceptual part. So here in this particular lecture we will be looking at some of the illustrations so as to make your concept more clear and also understand how adjustment entries are done in the books of account if there are any errors that are noted. So now starting with the first illustration, which says rectify the following errors assuming that the errors were detected. So first scenario is that we have to assume that such errors were detected before preparation of the trial balance. And the second scenario is that after preparation of the trial balance but before preparation of the final accounts. This is the second scenario. And then the third one is after preparation of final accounts such errors were detected. So how do we pass on the entries in the books of accounts while we detect the errors before preparation of trial balance or after the preparation of trial balance? If some particular errors are detected, then how we will be solving such errors. And again, the third part is that after preparation of the final accounts, if there are some errors that are detected, how do we pass on the rectification entries? So the first entry or the first error that was detected was that purchase plant. So purchase of a plant for rupees 10,000 has been wrongly passed through the purchase account. So this purchase account would be related to the goods and services in which the business is dealing, and the entry goods and services in which the business is dealing, right? So the purchase account maintains all the purchases of the goods in which the business is dealing or which helps in generating the revenue for the business. However, a purchase of the plant, so this plant must be the asset of the business. However, that purchase has been recorded wrongly in the purchase account, right? So the first error is this. The second error says sales day book was cast short by rupees 1,000. So in the sales day book, there was 1,000 cash was recorded less as compared to the actuals. So this is the entry. This is the error that was identified. And then the third error says that cash paid to Mr. X. So this is the posting error, as in that cash that has been paid to Mr. X is worth rupees 1,000. However, it was posted to his account as only rupees 100. So the differential amount, and how will we compensate that differential amount in the books of accounts, that is what we have to see. Then purchase goods from Mr. T for rupees 3,500 was entered in the purchase day books. Again, this is a posting error that for the purchase goods worth rupees 3,500 were purchased. However, in the purchase day book, it was only mentioned as 500. And paid salary for rupees 3,000 wrongly passed through wages account. So here it is a simple error. However, how we will treat it in the books of accounts, that we will be figuring out while solving this particular illustration. So let us just start solving it. So now starting with the solution. So the first error that has been detected in the books of accounts is that the purchase of the plant worth rupees 10,000 has been debited to, wrongly passed through purchase account. So as I said, that purchase account only records the goods and services that are being purchased in order to generate purchase or being sold in order to generate revenue for the business. So in such account, we have wrongly debited the purchase of plant. So plant being the asset of the business has to be debited in the asset account. So in before preparation of trial balance, we would, because we know both the both the accounts in which the entry needs to be passed on, so we would be crediting the purchase account as we've already debited 10,000. So we, in order to nullify the effect of that 10,000, we would be crediting the purchase account and thus debiting and directly debiting the plant account. That is, so here what would be the entry, plant account being the asset of the business debited, and the account that will be credited would be the purchase account, as such entry, that is the amount of rupees 10,000 has already been debited to the purchase account. So in order to have the reverse impact and nullify the effect of that 10,000 from the purchase account, we would be crediting the purchase account and directly debiting the plant account. And after preparation of the trial balance also, the entry will remain same, as here we know both the accounts in which the entry needs to be passed on in order to correct the or rectify the error that is detected. So the entry remains same. Plant account would be debited and purchase account would be credited with the amount, that is 10,000. However, once we have prepared the final accounts, then the entry needs to be passed on in the plant account through P&L adjustment, as we have already closed our final accounts and the nominal accounts of the P&L. So after preparation of final accounts, we cannot make changes in the ledger accounts or the nominal accounts that we have already closed. So the entry would be done by plant account would be debited and the account that would be credited would be P&L adjustment account, as all the entries or the rectifying entries which are passed after preparation of the final accounts are through the P&L adjustment accounts. So here the amount will be 10,000 and crediting P&L adjustment account. Clear? So the reason why we are doing it through after preparation of the final accounts, why we are crediting the P&L adjustment account instead of the purchase account, because we have already finalized and closed our books of accounts. So we cannot make the changes in the ledger accounts that have already been closed. So if any error is detected after the preparation of final accounts, then such rectifying entry would be passed through the P&L adjustment account. Okay, so the second error that was detected is sales day book has been cast short by rupees 1,000. So now before preparation of the trial balance, we would directly be crediting the sales account. So sales account shall be, so we won't be making any changes in the day book. When we have realized that that it has been cast short by rupees 1,000, so we will simply credit the sales account. Sales account will be credited and by rupees 1,000. So this because the entries or the sales account has not been closed and we have not passed on the closing balance into the trial balance or into the final accounts. So therefore we can simply credit before preparation of the trial balance. If such an error is identified, we can simply credit the sales account with rupees 1,000. So in the case of after preparation of trial balance, once the trial balance or the balances are listed out, and when we see the debits and the credits alongside the closing balances of the debit side as well as the credit side, and in case we identify some mismatch and if there are some errors, then such errors are initially put into the suspense account. So likewise, there must have been the suspense account must have this particular 1,000 rupees difference also in that. So after preparation of the trial balance, all such errors and all such mismatches would be accounted for in the suspense account, and as in when we identify and detect a particular error, such error is rectified through the suspense account. So here we know that this particular 1,000 rupee difference has to be credited to the sales account. So we'd be doing to sales account and suspense account is going to be debited, as all the entries, rectification entries, need to be corrected through the suspense account, as we have taken all the differences in the suspense account in order to identify and estimate what is the balance of the suspense account that needs to be identified and rectified. Thus suspense account is debited with rupees 1,000 and the difference is reduced from the suspense account and thus credited to the sales account with rupees 1000. So this is how we correct the entry after preparation of the trial balance. Now in the case of after preparation of final accounts, as we've already discussed, that once the leisure accounts are closed and final accounts are prepared, we cannot make the entries in the leisure accounts. So all the rectification entries need to be done through the P&L adjustment account. So therefore here also we would be referring to the suspense account. A suspense account has all those entries wherein there is a mismatch or such amount or such value could not be identified. So the suspense account has all the differences which are identified while tallying the trial balance or while making of the final accounts. You identify some differences which you are not able to figure out. So suspense account has all such entries whose identity is unknown, or is if there is some misunderstanding as to what this particular transaction is about and it is not traceable. So all such entries are there, and once we identify a particular error, so that particular error is thus rectified through suspense account in the case of after preparation of final accounts also. So we would be debiting it by rupees 1000 and crediting the P&L adjustment account. All right, now looking at the next error. So the third error says that cash is paid to Mr. X for rupees 1000, which is posted to his account as rupees 100. Now X, when we talk about Mr. X, so that is a personal account which we are mentioning here. And like in the case of sales also, we have quickly credited the sales account by rupees 1000 when we detected it before the trial balance preparation. So here also, because 1000 rupees was posted as rupees 100, so the 900 difference would be immediately debited to Mr. X's account. Mr. X's account will be directly debited by rupees 900. So we would be simply charging the difference and debiting it to the excess account, and there should be no double entries which needs to be passed on, because as we know the nature, that 1000, instead of 1000 rupees we have recorded 100 rupees. So of the same nature we would be recording 900 rupees and simply debiting the X's account. And so here, as it is not been mentioned, so we can simply say that the X could be the owner itself, which has a separate account which is maintained. So this could be the capital account, in which when the payment was made is of rupees 1000, so instead of its rupees 1000 only 100 has been recorded. So the remaining 900 would thus be directly debited to the personal account of Mr. X. So now preparation of trial balance, and if we see that cash has been paid to Mr. X for rupees 1000, however posted in X's account in as rupees 100. So it is a single-sided error. If we see only the account of X has been affected, so we would be rectifying this particular entry again through the suspense account, as because the difference that is there in the trial balance, as in which is not tallying the debit and the credit balance, so such effect must have been recorded and put into the suspense account, and in order to reduce that particular effect we would be thus debiting the X's account, Mr. X's account, and crediting the suspense account. So here the entry that we will pass is Mr. X's account is debited and suspense account will be credited. Because it is a single-sided error, so in order to rectify we would thus be crediting. So in the case of single-sided error, as we all know, that after preparation of the trial balance, rectifying entry is passed by debiting or crediting the suspense account. So therefore rupees 900 rupees 900. And in the now coming to the after preparation of final accounts, if such error has been detected after the preparation of final accounts, now in the case of Mr. X, so Mr. X's account is not a nominal account, and in the cases of nominal account, so in the cases of nominal account, after preparation of the final accounts, as we discussed before also, we will be transferring the rectification entries by debiting or crediting the P&L adjustment account. But in the case of personal accounts, like in the case of Mr. X, we will not be rectifying the entry through P&L adjustment account. We would be so the double impact which will be brought after preparation of final accounts would be through the suspense account. So we will be simply, so the account that remains affected or that has to be debited would remain the same. That is Mr. X's account would be debited through, and the credit impact would be recorded in the suspense account. And why not P&L adjustment account? Because Mr. X's account is not of nominal nature. So therefore the entry would be Mr. X's account debit to suspense account rupees 900. Clear? So the fourth error says that purchase goods from Mr. T for rupees 3500 and entered in the purchase day book as rupees 500. So there's a difference of rupees 3000 which has not been recorded, and that needs to be corrected in the books of account. So in the case of before preparation of trial balance, what is the entry that needs to be passed upon? So we would be debiting the purchase account. So purchase account debited, crediting T's account, and thus passing the same entry, however with the difference that since the goods have been purchased for 3500 and the amount which has been recorded in the day book is only rupees 500, so in order to bring the correct amount we would thus be passing the entry with the difference of the amount, so that is 3500 minus 500. Purchase account will be debited by rupees 3000 and crediting the account of T, Mr. T, as the goods have been purchased from Mr. T. So likewise in the case of preparation of trial balance also, since we know the double impact and this is a double-sided error, so the entry passed on would be the same, that is purchase account is to be debited. Purchase account is to be debited, which is with the amount 3000 to T's account. And in the case of preparation of final account, since we know that this is a nominal account and this is a personal account, so the entry which would be passed on, so the account that would be affected or the rectifying entry would be passed on directly to T's account, and it would be with 3000 only. However, in the case of purchase account, we would be passing the entry through P&L adjustment account. Debit 3000. Clear? And now coming to paid salary rupees 3000 and wrongly passed it through the wages account. So it is similar to the entry that we did in the first case. So because we know both the the accounts that are being impacted, so we would simply nullify the wages account and debit the salary account. So salary account debit 3000 to wages account, right? And again, in the case of after preparation of trial balance, since it is a double-sided error, so we would simply be crediting and debiting the respective accounts. So again, salary account will be debited 3000 and wages account will be credited in order to remove the effect of that particular entry wrongly debited in the wages account. So this would again be 3000. Now in the case of after preparation of trial balance, if we see both these accounts are of the nature of nominal, so both these accounts are nominal accounts, so therefore what are we going to pass the entry after preparation of trial balance? So the effect has to be given through, so the debit debit as well as the credit effect has to be given through P&L adjustment account only. We cannot change or we cannot open such accounts after closure of and after preparation of the final accounts. So thus the adjustment entry that would be passed after preparation of final accounts would be P&L adjustment account debit 3000 to P&L adjustment account credit. So to P&L adjustment account, so crediting 3000 rupees. So as it is evident that this entry is bringing any nil effect, as we are debiting the P&L adjustment account and crediting the P&L adjustment account. However, we can mention in the narration stating that what we are rectifying by making such adjustment, and as we've already finalized the final accounts and prepared the final accounts, so the nominal accounts cannot be rectified. So therefore the adjustment entry is going to be passed through the P&L adjustment account. So now this completes this particular illustration. Moving on to let us take a look at the next illustration. So the second illustration talks about a merchant while balancing his books of account notices that the TB did not tally and it showed excess credit of rupees 1700. So the books, so basically after preparation of the trial balance, such errors have been detected. So after he placed the difference to suspense account, subsequently he noticed all the following errors. So the first error says goods brought from Narayan for rupees 5000 were posted to the credit of Narayan's account as rupees 5500. An item of rupees 750 entered in the purchase returns book was posted to the credit of Pandey to whom the goods had been returned. And sundry items of furniture sold for rupees 26,000 were entered in the sales book. Again, a discount of rupees 300 from creditors have been duly entered in the creditors account but was not posted to the discount account. So we have to pass the necessary journal entries in order to rectify these errors and also show the suspense account. So the errors have been identified, the differences from the trial balance, and after preparation of the trial balance, the differences has been placed in the suspense account. So first, one by one, these entries have to be rectified, and after rectifying these errors, the suspense account needs to be formulated. So we'll discuss the errors one by one, and after finishing the class, you would be solving this particular illustration on your own. So we will be discussing all the entire question in the class. All you need to do is attempt it yourself after the class is over, or you can also pause the video and attempt the question alongside once we finish discussing this particular question. So the first error that says that goods have been bought from Narayan for rupees 5000. However, the account is credited as 5500. So we have given the extra credit of rupees 500, which we will have to debit the account of Mr. Narayan. So this is a single-sided error, as the purchases account has been correctly debited, but the credit has been wrongly done, as instead of recording 5000, it has been recorded as 5500. So the entry that would be passed through suspense account in the case of A would be, so we would be debiting the account of Narayan. In order to bring down the goods bought amount to 5000, we would be debiting the account of Mr. Narayan with rupees 500 and thus crediting the suspense account as because it is a single-sided error. So point B says that an item of rupees 750 that is entered in the purchase returns book was posted to the credit of Pandey to whom the goods have been returned. Now the error here is that the purchase returns, which should have been debited in the account of the person to whom the goods have been returned, we have wrongly posted it to the credit of that particular person's account. So in order to rectify this particular error, we would have to double the impact as because the goods that have been returned. So for instance, the goods have been bought from Pandey. So when the goods have been bought, so what would be the entry purchase account would be debited, and since we have bought those goods from Pandey, to Pandey's account would be credited to Pandey's account, right? And once these goods have been, such goods have been, so of the amount 750 only, if we say from 750 being credited and 750 being debited to the purchases account. So now Pandey's account is credited, and once these goods are returned, so Pandey's account needs to be debited, right? However, what we did, so the error that was done was Pandey's account, instead of being debited, has been credited. And in order to nullify the effect, so because we have credited instead of debiting, so Pandey's account has been credited with 750. So first and foremost, we have to nullify this effect of debit by debiting the account of Pandey. Debiting account of Pandey with rupees 750 in order to nullify the effect of the account that has been credited, and also in order to rectify the purchase returns, the returns that have been made, another entry of 750 needs to be passed on in order to make the purchase return entry being correctly recorded in the account of Mr. Pandey. So therefore there has to be a double impact of 750. One 750 would be related to the returns that the goods have been returned by to Mr. Pandey, and the other would be to nullify the effect of this particular error that has been wrongly credited. So 750 has been wrongly credited to Pandey's account. So therefore the entry that we would be passing on would be Pandey's account debited. And again, this is a single-sided error because we have correctly recorded the entry in the purchases account, or the purchase return has been correctly recorded. However, the goods that have been returned to the particular person, such account has not been correctly rectified. So Pandey's account is going to be debited 1500 to Suspense account. Now the next error that is identified is sundry items of furniture sold for rupees 26,000 were entered in the sales book. So again, the items or the assets of the business have been sold, and such entry has been recorded in the sales book. So as we discussed in the previous illustration, that the purchase account and the sales account are specifically maintained for the goods and services in which the business deals, and such goods and services are bought or sold in order to generate revenue for the business. So that the nature of sales book and purchase book is different, and the asset accounts are specifically, the sale and purchase of the asset accounts are maintained separately, and such accounts are maintained separately. So the entries related to the purchase and sale of assets will not be entered in the purchase book or the sales book. So thus this has to be correctly rectified. Now the items of furniture that have been sold for rupees 26, so we know so this is a double-sided error, as we know the impact. So furniture has been sold for rupees 26,000 and the sales book has been wrongly credited instead of that particular furniture as furniture account being credited. So this entry that will involve, so in case, because it is a double-sided error, so the impact would be brought into the furniture account as well as the sales account. So since sales account has been wrongly credited with rupees 26,000, so we would be debiting the sales account and crediting the furniture that has been sold. So furniture has been sold, so therefore it is reducing the asset account, so thus we would be crediting the furniture account. And because we've already taken this effect wrongly in the sales book, so thus we would be debiting the sales book with amount of rupees 26,000. Right, so we are almost solving this question here. It's just that you have to simply record it in your or put it down in your registers in a fair manner. And after discussing of this question, you have to simply pause the lecture. You have to simply record it in the books and solve it on your own. So it's almost solved. It's just that you have to make a fair version of the solution in your notes or in your registers. So now coming to the last error that has been identified, that is discount of rupees 300 from creditors had been duly entered in the creditors account but was not posted to discount account. So the one entry or one impact of the entry has been correctly recorded, which is in the creditors account. However, in the discount account, such a discount that has been received has not been impacted or has not been recorded. So this is again, as it is very much evident from the point itself, that it is a single-sided error because one impact has already been brought into the creditor's account, and in order to bring the other impact, we would be thus involving the suspense account and correcting it through. So this is a discount received from creditors. So because it is a discount received, that means it is an income that has been received. So we will be crediting the discount account and debiting the suspense account with this amount in order to bring the rectification effect. All right. Now, after passing on of these four entries, we have to formulate and we have to draft the suspense account also. So we have been given that there has been an excess credit that has been identified by the merchant while after preparation of the trial balance. So this particular balance will be taken into the suspense account, and then after that the entries that we have passed would be put into the suspense account, and then ideally your suspense account will match, the debit and credit side will matching, because these were the errors, and once these have been rectified, the suspense account becomes nil. Alright, so hope you will be able to draft it on your own and put it down in a fair manner in your registers. So moving on to the next illustration. Now so far we have covered the rectification entries which were done before preparation of the trial balance. So let us take a look at an illustration wherein we have closed the books of accounts, and such errors were found after closure of the books of accounts. So the illustration says, the books of accounts of A Company Limited for the year ending 31st March 2013 were closed with a difference of 21,510, and such difference was carried forward in the books, and the following errors were then subsequently detected. So what are such errors that have been detected? That return outward book was undercast by rupees 100, and rupees 1500 being the total of discount column on the credit side of the cash book. So this error omission entry was there. Undercasting of return outward book was there for rupees 100, and then 6000 being the cost of purchase of the office furniture. So office furniture was purchased, but instead of debiting the furniture account, we debited the purchase account. And a credit sale of rupees 760 was wrongly posted as 670 to the customer's account in the sales ledger, and the sales account was undercasted by rupees 10,000 being the carryover mistake in the sales day book. Closing stock was overcasted by rupees 10,000 being the casting error. So such errors were then subsequently detected. Now, as we know that after we close the books of accounts, in case of the nominal accounts, in case of nominal accounts, all the entries would be, so all the adjustment entries or all the rectification entries would be done through P&L adjustment account. right? So here all such adjustments. So because we've already closed the books of accounts, the final books for the previous for the year ending 31st March 2013 have already been closed. So we cannot go to the ledger accounts directly wherein we have found such mistakes. We cannot separately go to these ledger accounts and pass on the entries, especially in the case of the nominal accounts. So in that case, the entries that would be passed would be through the P&L adjustment account. So all sales, expenses, incomes and gains related errors would be rectified through P&L adjustment account. So the question says, pass the rectification entries in the next year, as the previous year books have already been closed. So we cannot do anything in that particular year. And we have to further prepare the suspense account and state effect of the errors in determination of the net profit of last year. So further, after passing the rectification entries in in the next year, we have to also determine the effect of the errors in determination of net profit of last year. So how much such errors have affected the net profit, that also we will be ascertaining in this particular illustration. So starting with the solution. Now, in the books of A Limited, we would be passing the journal entries and the first rectification entries in the journal that we would be passing the entries in the next year. So the date that would be here would be April or 1st April 2013. So now the first entry is that the return outward book was undercast by ₹100. So we have to increase the balance of the return outward book by ₹100, and now return outward again refers to or relates to the purchase return book. So we would be passing on the entry through P&L adjustment account. And the differences, that is the difference of ₹21,510, would be noted down or would be included in the suspense account of the book. So we will be debiting the suspense account. Suspense account debit to P&L adjustment account ₹100. Right? Return outward undercast now rectified. So you're understanding why we passed on or debited the suspense account, as the adjustment entry has to be passed through P&L adjustment account, and the purchase return or the return outward book cannot be credited with the undercast or the rectification entry. And also, in order to reduce the balance which has now been rectified, we will be debiting the suspense account, as such difference that was found out and that was evaluated on closure of the previous year account books must have been put in the suspense account only. So as and when we recognize and rectify a particular entry, then the impact or the second impact needs to be given to the suspense account, so that the suspense account is reduced by such amount and such value of the entry. So the next error that was detected was, so ₹1,500 being the total of discount column on the credit side of the cash book was not posted. So the discount received was not accounted for in the books of accounts in the previous year. The 1,500 amount was completely omitted. So this is the income, as in the discount received, that we have to account for in the book. So the date will remain same. All the rectification entries will be done on the same date, that is on 1st April 2013. So we would be again, as the impact impact is that the income needs to be recorded. So the income would be recorded in the P&L adjustment account, and thus we would be crediting the P&L account and debiting the suspense account, as we have to remove the impact of the difference, that the error or the entry that has been rectified. So suspense account debit to P&L adjustment account with the amount that is 1500. Right? Here the narration would be discount received not accounted for, now rectified. Alright. So now the third point says that rupees 6,000 being the cost of purchase of the office furniture was debited to purchase account. So instead of debiting the furniture account, we debited the purchase account, and the difference of the amount was 6,000. So we would be again passing the entry or passing this adjustment rectification entry through P&L adjustment account. However, the suspense account will not be reduced in this case. So the second impact would be in the account of the furniture account itself, as we would be directly debiting the furniture account with the particular amount and adding the asset that was purchased in the furniture account directly, as because the in the case of real accounts and in the case of accounts that are not nominal accounts, so for instance for asset or for liabilities or for owner's equity, we would be directly debiting and crediting their account instead of the suspense account or the P&L adjustment account. Now since purchase account was wrongly debited, so in order to bring the credit impact in that particular, so in order to reduce the purchase account from the amount of the furniture purchased, for that we would be passing the entry in the P&L adjustment account and directly debiting and adding the asset purchase, that is the office furniture purchase, in the furniture account. So the entry would be office furniture account debit to P&L adjustment account, amount being 6,000, right? And the narration would be office furniture purchased wrongly debited to purchase account, now rectified. Okay. Now continuing the same. So now the fourth rectification entry says that a credit sale of rupees 760 was wrongly posted as 670 to the customer's account in the sales ledger. So now as you can see that it is a single-sided error, as the credit sale has wrongly been posted as 670 instead of 760 in the customer's account, and as it involves customer's account, so nominal account is not involved, so this rectification entry would be directly done through the debtor's account, and such single-sided error would be rectified through the suspense account, as we all know, and we have done in the concept, we have covered this in the concept while covering the double-sided and single-sided errors, that in case of the single-sided errors, even after the preparation of the trial balance, such accounting entries would be passed through the suspense account. Now, so since the impact is, we have to increase the ledger account of the customer's account, as the credit sale was done of rupees 760, however it has been recorded as 670, so we have to increase the debtor's account, so thus debtor's account would be debited and the suspense account would be credited. So thus debtor's account debit to suspense account, and the amount would be 760 which brings us the difference, that is debtors account would be increased by 90 rupees, right? Being rectification entry passed to increase difference. Right, now coming to the fifth entry, which says the sales account was undercasted by rupees 10,000, being the carryover mistake in the sales day book. Now again we have undercasted the sales account. So like in the case of return outward book, we had adjusted the entry through P&L adjustment account, and the simultaneous impact was decreased from the suspense account after passing the rectification entry. Likewise in this case also, in order to increase the sales account, which was undercasted by rupees 10,000, and being the carryover mistake, so we would be crediting the P&L adjustment account as the sales have to be increased. So in order to increase the sales, we would be crediting the P&L adjustment account and thus reducing the suspense account with the same amount. As after rectification of such sales account, the difference that was there recorded in the books of previous year would be reduced by such amount. So the entry would be suspense account debit to P&L adjustment account, and the date that we are mentioning here would be the same, that is 1st of April 2013. Amount going to be 10,000. Being sales account rectified. So the last entry that we have is that the closing stock was overcasted by rupees 10,000, being casting error in the schedule or inventory. So we have been given the amount and we have been given the account that was impacted, that is the closing stock was impacted and it was overcasted. So we will have to reduce the effect of rupees 10,000 from the closing stock account. So as we all know that closing stock comes on the asset side of the balance sheet. So it is a balance sheet account. So here we would be directly making the changes in the closing stocks, and by overcasting we mean that the inventory that has already been used in the business have been included in the closing stock account. So we would be reducing the impact. So closing stock being the asset of the company, in order to reduce the effect on the closing stock, we would be decreasing the amount of rupees 10,000, so crediting the closing stock account. And since it is a casting error, as in the inventory has been recorded in the closing stock, so such inventory would thus be moved to the profit and loss account, and which would be through the profit and loss adjustment account. So because we would be crediting the closing stock and reducing the effect of rupees 10,000, we would thus be increasing the P&L adjustment account, as the inventory would have to be increased for the previous year. So the rectification entry that we need to pass is P&L adjustment account debit to closing stock account rupees, or we would simply mention 10,000. Here also we would mention 10,000. So being closing stock overcasted, now rectified. So this is simple, that you simply have to pass on the rectification entries, and you have to, in the case of closure of the books of accounts, you have to identify which accounts are going to be directly impacted and wherein the rectification entries have to be directly passed into those accounts. So those such accounts are the asset accounts or the personal accounts of the business. Asset accounts, liability accounts, owners account would be, so the entries or the rectifications would be directly done in such accounts even after the closure of the particular accounting period. However, in the case or the rectifications related to the nominal accounts, such entries would be passed on through the P&L adjustment account. Also, in the case of single-sided errors, we have to make sure that the second impact, that is, if the account that is being done in the case of single-sided error, if one account is being debited, then suspense account is to be credited in order to bring the double impact and reduce the balance of the difference that has been recorded in the suspense account. So now the question says that we also have to prepare the suspense account and also state effect of the errors in determination of the net profit of last year. So let us first draft the suspense account. So the difference that is recorded in the suspense account in the books of accounts which are closed were, so the difference is, and the date that we would be mentioning is 1/4/2013. Why difference in trial balance? We would first be recording the entire difference that needs to be carried forward, and that is carried forward in the suspense account, which is 21,510. Then simultaneously, according to the entries that we have, rectification entries we have passed, we would simultaneously record such entries in the suspense account. So the first entry that we had passed was of the return outward book, which was undercast and which is now rectified. So here we would be bringing the effect of return outward book to P&L adjustment account, rupees 100. Then the second entry we passed was rupees 1500, which is the discount received again to P&L adjustment account. Suspense account was debited with rupees 1500. So bringing the same in the suspense account. Then the third entry did not involve any debit or credit in the suspense account, as the office furniture was directly debited and P&L adjustment was credited. And then debtors account is debited to suspense account with the difference that was not recorded in the customer's account. So here, by debtors account 90, right? Then again, suspense account was debited as the sales account has been undercut. So therefore, reducing that difference to P&L adjustment account 10,000. So now these were the entries which involved the suspense account. So now if you take out the balance, if we do the total of both the sides, so we have 21,600 here, and the balance, in order to nullify the suspense account, so we would be decreasing and bringing it down to zero before finalizing of the accounts in this particular year. So the balance will also be transferred to the P&L adjustment account in order to bring down the difference to zero, and that is rupees 10,000. And so therefore P&L adjustment account 10,000, and thus bringing the total to 21,600, and suspense account, and making the suspense account nil. So now the next step, or the third part in the question, is to see the impact or effect on profit of such rectification entries passed as to the profit of the previous year would have been affected by how much amount, or what should be, whether the profit has been increased or whether the profit has to be decreased if such rectification entries would have passed in the previous year. So let us take a look at this: increase or decrease. So we would one by one, according to the adjustment entries part, we would see the impact of such entries on the profit. So in the first entry, the first entry that we pass, that is the purchase or return outward book, was undercast by rupees 100. So because it was undercasted, so we increased the impact, so which will decrease. So because purchase returns was increased, so therefore we the profit would be decreased by rupees 100, right? You understanding why? Because the amount of rupees 100 that we counted, that the purchase would have happened and accounted for that in the books of accounts. Now with the increase in the purchase return, the profit would be reduced by that particular amount. So the second rectification was that the discount received was not recorded. So thus the discount as an income was not recorded. So thus the amount of the income or the discount that has been received, with that amount, since it was not recorded, so it would have decreased the impact on profit, as if such income would have been included in the previous year. So with the difference of rupees 1500, the profit of the company also got effective and got decreased due to omission of such discount received. Again, the purchase account, so furniture was purchased, the asset was purchased, and however we recorded it in the purchases account. So with that also we would be decreasing the impact of, as the purchase account would be reducing, so thus such impact also would be decreasing the profit by rupees 6,000. Then the next entry, the customer's account, the sales was recorded less in the customer's account, not in the sales account. So the sales account was not impacted, only the customer's account needed to be increased by rupees 90. So thus it will not have any impact on the profit, as it did not involve any nominal account, or any nominal account did not get impacted in the fourth rectification. Now in the fifth part, we had that the sales account was undercasted. Again, we reduced, or we because sales was undercasted, had this difference been noted earlier, so the impact of the profit would have increased by rupees 10,000, since it was not recorded and it was undercasted. So thus with this particular effect also, the profit would have been affected by rupees 10,000. Now, since the closing stock was overcasted, and after reducing the impact of the closing stock and moving it to the inventory, the profit would have been increased. So increasing the closing stock, reducing the closing stock, moving it to the inventory would thus make an increase, would impact the profits and lead them to increase. So thus increasing the profit by rupees 10,000. So the total increase in the profit, or increase in the effect on profit, is 10,000. However, the total of the decrease amounts to 100 plus 1500 plus 6,000 plus 10,000, that amounts to 17,600. So thus profit will be decreased by 7,600. All right. So this is how you will be, after passing the rectification entries and after drafting the suspense account, then you can easily draft the impact of such rectification entries on profit. And how we have evaluated, you have understood that had it been that such entries would have recorded, how the impact on profit would have been at that point of time. And since it did not happen, so thus it led to increase or decrease in the impact, and that is how we have recorded the effect on profit here. And this is how you will be doing and solving such questions in your examination. illustration as well. So there are more practice questions in the chapter that you are supposed to do and you should do in order to get a hold of such questions, as such questions are time and again asked in your papers and thus are very, very important for you to understand. So these adjustments look very easy. However, a single mistake can make your answer incorrect. So this completes our chapter 1, that is fundamentals of accounting, and practice the, so I've covered most of the questions or most of the illustrations from your study material. The remaining questions, if you practice, you would be able to solve them on your own, as we have covered the important ones in the class, and the adjustments that are there in the other illustrations are similar to the ones that you have already covered. And if you sit and practice for those questions, you would be easily able to solve them. And I would recommend that you solve each and every question, as more and more practice would help you in making your concept stronger and thus reducing the chances of committing any mistakes in the exams. You can easily score the marks that would be covering the questions from this particular chapter. So do practice all the questions in the all the questions in the study material that we have left, and revise the concepts thoroughly once again, and then move on to the second chapter.